Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Wednesday. We're going to take a quick peek at the economic calendar to kick off the morning. And when we're looking at the economic calendar, gang, remember, these are not trades per se, right? We're not trading the news. I think a lot of you who have been following me for any length of time know that we're not trading what the difference between the consensus and the actual. What do we think the news is going to be? And what was it actually? We're not trading that chasm in any way, really. What we're trading is the timing, because we know there's going to be a lot of attention and there's going to be a lot of reaction. And then we're also trading the chasm between what we thought, usually a whisper number of some sort, how we reacted in terms of what we thought the number was going to be, and how right or wrong we were. That is, by the way, where buy the rumor, sell the news comes from. Right? Buy or short the news, right? Make some sort of guesstimate, educated guess about what that data means. Earnings, CPI, PPI, FOMC, insert whatever it is in there. And then how right or wrong were we? And that's that volatility. So I hope that makes sense. All right. So then we have today. So we go into today. We have the core retail sales. We'll take a look at the aftermath of that and how I measure that. We have cap utilization rate at 9:15, which is coming up in about 13 minutes. FOMC member Williams, funny little event here. He's the academic on the panel. He's speaking at the U.S. Treasury Market Conference. It's a low heat, hot zone, but it's still a major known FOMC member talking 9:50, unusual time, 10 minutes before the end of the clearing at 10 o'clock. As if that's not enough, we've got ECB President Lagarde in yesterday's free video. You can check that out at the Simpler Trading YouTube channel, the very one that you're probably on. If you're on my YouTube channel, head on over to Simplers later on. Check out that free video. I mentioned what the catalyst for movement could be based on Lagarde speaking, what that could do to the euro, what that could do to the dollar, and even gold. So you can check that out there. We've got FOMC member Barr, crude oil inventories, and then FOMC member Waller at 2:35 today. Keep in mind, it's not just about today, but what are we then dealing with tomorrow? Bullard, Philly Fed manufacturing, unemployment claims, even more FOMC members speaking. So we're always looking ahead. We know what's going to happen, say, in the next few hours or that current session, but we start to look at a little further ahead. So looking at the week in its entirety, say on a Sunday, is a really good idea. So to know that, it might be Monday, but do we have the Fed on Wednesday? That's going to change the way Monday and Tuesday respond, knowing there's a major event happening on Wednesday. So make that calendar a staple in your pre-market process. All right, gang. So as always, let's go ahead and take some questions and see what is on your mind. Kicking it off with Prince, who asks, how do I take into account a win-loss ratio on a volume setup? I don't. From a minor high, minor low, candles aren't all the same. It seems a little too fast-paced. So when you say win-loss ratio, you mean risk-reward? The risk-reward? How do we take into account? Well, every setup has a point of validity, Prince. So when I look at that setup, I can immediately see where the stop loss would be. So I know the difference between my entry and the stop times the number of contracts. That's my risk. And then target should be, again, that should be all part of it. Now, for example, the minor high low, remember, that's going to take up to 15 minutes. That should be enough usually, even for a day trade, to at least get a pretty good idea of what our risk reward, I think that's what you're asking. So I hear you, what our risk reward should be for the setup. All right, thanks for the question. Next up, Alex asks, can I please take a look at gold on the daily for a short as we break below the minor high? This is one of the updates, one of the symbols in the update from last night. We haven't broke below the minor high yet on gold. I will be keeping an eye on it. I am looking for an overbought short, overbought on the stochastic, up against the mean on the V score, and then the price pattern. I'm with you there, Alex, but it hasn't triggered quite yet. All right, Robert, good morning. Could I please take a look at Bristol, Meyer, Squibb, or Pepsi? We could take a look at both. Both look ready for a call entry on a swing. Was thinking of buying 7 to 14 DTE for a wing trade. All right, Robert. So I won't make comments. I don't trade wings. I don't trade butterflies, broken or not. But I will say, let's start with structure, because regardless of the strategy, the structure really is going to be the determining factor, right? Of what directionally I want to do, and then what strategy is best for me and my account. So the strategy, actually, believe it or not, I know for a lot of you, you know this, but structure is more important than strategy. Structure dictates strategy, right? So if I'm looking at the structure of BMY, I'm with you. I like it a lot. I agree. It's ready for at least a bullish setup, right? So let's just think, am I bullish or bearish? Can I be that binary about it? Because I shouldn't ever be neutral about, well, could I be long? Could I be short? Then I know I don't have a setup. So I'm with you there. So we do like the long side of BMY. And then do we like the long side of PEP? Not as much. So I would stick with BMY over PEP. So that's the first thing, right? What we trade is more important than how we trade it. So if structure dictates strategy, very true. Watch list building. If we think upstream of our trading, what are the things that typically lead to less than ideal trading from us? I know for me, when I look at my trading results, it was seldom a decision between, oh, I should have gone long call or collected premium, or I should have, gone at the money versus out of them. That's usually not the differentiating factor. It's usually as simple as, was that the best setup? Meaning the symbol that I was looking at, was that the best representation of a trend that I could have found in that group? So is BMY the best uptrend? That I do not know. I'd have to look at the other stocks that move with BMY, likely crack open the XLV ETF, right? That's the process. So what we trade is more important than how we trade it. And you might say, wait a minute, Rog, think of it this way. In the context of an uptrend, someone buying momentum, they'll probably be fine. Someone buying a dip, they'll probably be fine. Someone getting long a call, they'll probably be fine. Someone selling put premium as we're pulling back, they'll probably be fine. Those are 4 different strategies, but the structure is what's going to determine the higher probability likelihood of a win in terms of all 4 of those. So what we trade is more important than how we trade it. I like the long side of that one, Robert. I'm with you on BMY. In the book Range, who is the author? In the book Range, I have a copy of Range on my desk. I don't know if you're talking about David Epstein. That's the book that I have on my. I think that's it, Jack. Okay, next up, Trader Momo, being a new SSM member. Cool. Welcome. I find it invaluable to go back to Monday, Tuesday recordings while pulling up the workflowy notes to recap. Yeah, I love the notes. I think that for me, I'll tell you what, Momo, even when I'm by myself in my office here, and the some days when I'm not on the mic, which is very few, but I'll even do notes for myself. I will, and it keeps me disciplined. It keeps me thinking in a process, and it keeps me seeing what I'm thinking before I enter the trade. And those moments of clarity, more unemotional clarity before we enter a trade, is probably the most valuable time we could spend building the trade and documenting what we want to do. Because once we're in the trade, the emotion kicks in, right? I'm not Vulcan, right? As much as I would love to be. But I know that in terms of the importance of that, yeah, I do notes. I encourage everyone, keep the notes. It will, your own notes, right? All right. The question is, how do you determine the targets of the trade? It depends if we're long or short. And Momo, it's usually support or resistance. It's usually going to be support or resistance. What calendar do I use? Gemini? You mean the economic calendar? Sure. Forex Factory is a great one. Forex, Forex factory.com. Tradingeconomics.com is another great one. For earnings, I prefer Estimize, ESTIMIZE.com. Those are three. Another one that we use quite frequently in the Sector Secrets Mastery is the, I don't use it, but Lorna Bot uses it quite a bit, and that's the Econoday calendar. And so those four have been usually in pretty heavy rotation amongst the members. And so that one of those, whichever one I would pick, I would definitely have one for earnings, whether you like Earnings Whisper or whether you like Estimize, and then pick at least one global economic calendar, because one thing that's really important about a global economic calendar, especially in a room where we trade equities and futures like the Sector Secrets Mastery, is I have to know what's happening at 8:30. It's ideal to know what happened in the hours preceding the US Open. And if I'm only looking at a sort of US based calendar, I'm not going to be able to see. Maybe Lagarde spoke at 3 in the morning Eastern, not uncommon. Maybe we had something that happened earlier during the European and UK session that could influence the mood of the US Open. So thank you for the question. All right, next up is, say that Karthik, seeing a lot of double green sector ETFs. Are we seeing a lot of them? I know they're popping up, right? I don't know that I quite categorize it as a lot, but it's definitely more than we have had, right? For sure. XLF has gone double green trend. Healthcare is green trend. So if we take a look at the major sectors, those two pop out. Industrials, XLI has gone green trend. In terms of maybe some of the other sectors that are not heavily weighted within the broader averages, but are very important, like XLE. XLE is green trend. OIH is green trend. XOP. So those energy corners of the market around oil and oil production and oil services, green trend. Natural gas stocks, FCG, green. So energy has been clearly very strong. Financials and healthcare. But financials and healthcare and industrials would be really the only sectors as part of the broader averages that are heading in an uptrend. Are there others that are a little bit more, so not minor, but not heavily weighted in the indices? It's definitely starting to look like we're getting some clarity. It doesn't have to be bullish. It doesn't have to be bearish, but as long as we pick some sort of direction, and bullish is a little bit easier, we are back to looking at some dailies as we have been. So yes, excellent observation. All right, TL asked, how does 6E look this morning? So 6E is telling us that there is a potential setup. Now remember, Christine Lagarde speaks not on monetary policy, but she's speaking today at 10 a.m. Eastern. That means at the end of the clearing, we've got this European Central Bank, the head of the European Central Bank speaking. That's going to affect the euro. It's going to affect the US dollar for sure. And in that, we have really what amounts to an overbought euro. Now, if we have an overbought euro, we're very likely also looking at an oversold. And that means we're sitting at support and chop on the dollar. So I'm looking at trades in both of those today, long dollar, short euro, if we get the pattern to form. I don't know that I'm there quite yet. We have an inside day right now. So whether or not I'm going to end up trading the inside day or the minor high on 6E, TL still remains to be seen. Is it possible to have a true gap and a vanilla gap together? Well, a true gap, so let's go through the lingo for a moment. A true gap, I believe, is market profile lingo for an open that is, say we're gapping up. It's an open that is both above the previous session close and above the previous session high. So when both of those things are happening, you already have a vanilla gap. So if there is a true gap, a vanilla gap criteria has already been met, right? So if we open above the previous session close, that's just a vanilla gap, a plain old gap. We open above the close and the high, now it's true gap. So every vanilla gap, right, isn't necessarily a true gap, but every true gap is also going to be that plain old generic vanilla gap. All right. Next up, When choosing a target, do I take a minimum risk reward possibility into account? I don't want, yes, I don't want less than 1-to-1, ideally 2-to-1. And we definitely don't want an upside down risk reward. Do I have let me see here. If we have an upside down risk reward, I'm trying to see if I have an image that I put together. It's really basic, but let me see if I can find it. All right, here we go. See that there on I know it's a little, oh, it's okay. It looks pretty clear. You can take the win rate out of it, but it's hard to take win rate out of risk reward. Please don't ever trade an upside down risk reward. And here's why. Okay, here's why. Let me show you. Upside down risk rewards are usually the byproduct of an extremely generous stop loss, right? If I put my stop far enough away, I can sit with an unrealized loss of usually pretty significant proportion, but not get stopped out, with the possibility to give myself an opportunity to take a profit. That's fine until you get stopped out or get into the inevitable string of drawdowns. We all run into a string of drawdowns from time to time. If you're using an upside down risk reward ratio, potentially focusing on less reward than risk, when you have to have a very high win rate, right? You have to have a very high win rate, and you have to hope that when you do run into those, say, look, 75%, or this means you're still losing 3 out of 10, 4 out of 10. But what if all 4 of these come at the same time? And that's when traders say, but wait a minute, I had a high win rate, but if we are working a poor risk reward, it's going to gut the account. So please don't use upside down risk reward. I'm usually going to be somewhere no less than 1.5-to-1, preferably 2-to-1, but my win rate is somewhere in this area. Not quite usually. It's usually, I like to keep it around 60 to 70%. You can have a win rate that's too high. Absolutely can. We can get into that some other time, but you can have a win rate that's too high. If I start getting above 75, that means I'm taking my profits too quickly. That's usually a very good sign that I'm taking profits too quickly. So yes, we absolutely want to consider risk reward. You got it. You got it. All right. Next up is UNH, sure, versus CI. Okay. UNH is actually starting to look kind of good for an oversold buy. It's actually starting to look pretty good for an oversold buy. Now, notice you can have volume-based support and not necessarily, see, this looks like a double bottom on volume, which is trying to become one. Don't know yet, right? But it's looking like it's trying to become a double bottom on volume. But notice we don't necessarily have to have that same double bottom on price. And that's what confuses a lot of traders. And they're saying, well, Rag, you're looking at volume support and resistance. Does that override price-based support and resistance? Yes, it will. I still need a price-based pattern to get in, but UNH is looking like it could be an oversold buy. And if you're also looking at the stochastic, here we are heading down towards the low, which is the 20 level on the slow stow. Love a slow stow. This is by far my favorite overbought, oversold indicator, period. It's very effective, extremely effective. And it's built into most platforms. Just use these settings and you'll see how clean the setups are. Make sure you use it in CHOP. As far as CI goes, CI is more of a trending market. So I would say just from a structural standpoint, CI would probably be a little bit better. But UNH and CI are two very different stocks. It's hard to pit one against the other because UNH is heavily weighted in XLV. There are implications for healthcare within the Dow. You know, CI is not going to have necessarily the same type of relationship to the broader averages. So kind of apples and pineapples. But I love that one symbol versus another mindset, because that's very much the mindset needed to build a better watch list. So I like that thinking very much. All right, but UNH would be the winner for me. All right, gang. With all that being said, thank you as always for joining us for Charts and Coffee. I will see my Sector Secrets Mastery folks in the room. I'm going to go grab my coffee. I'll see you in the room in just a moment. Be good to each other, gang. Tomorrow, same time, same station.